Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 31st, 2018, and I thought I'd take a look at Australian dollar with the ETF being FXA. And the reason I'm looking at this is because we're at a point right now that an explosive move is going to be popping up here. So let's just kind of go through the analyses here and you get a feel for what I'm talking about. First thing is all of the trends are pointing to the downside, and when we have that kind of a condition as a contrarian, we're always looking at the opposite side, and a lot of this is dictated by what the technical rating is doing in comparison to that of the trend. So when you get this opposite condition, all of the trends to the downside, the technical rating to the upside, something doesn't seem right. And a lot of times what we can do is we can look at the pro alerts here, this on the daily bars, and you can see that just recently in the Australian dollar we had a lazy day that is triggered. We typically have to wait for around 15 days and then we start counting this, and it's just triggered today. And so when we take a look at the market here on the Australian dollar, these are daily bars, you can see the lazy day is basically saying that the market is moving sideways. It's not getting into overbought territory or oversold territory, it's just kind of going with the flow. And when you get that kind of a condition, it can only last for so long. So you can see that the trend is to the downside with all of those trend indicators we were talking about. But recently, within basically the month of July, the market has gone sideways, and so a lot of the trend indicators haven't picked up on the fact that the market is moving sideways more so than to the downside. Now that's not to say that the market couldn't pick up steam and start heading down, but there's a couple of clues here. The most important one here is the energy level. This one right down through here. The energy level is low. The fact that the market has been moving sideways and the fact that we are kind of stuck behind in between an energy zone, not energy level, but energy zone. We have this resistance, which we're bumping up against right now. We have bounced above it, a couple of different times, but nonetheless, we have some resistance to the market right through here, and then we have obvious support to the market here. Again, it's like a spring being wound up. We have support and resistance levels that are constricting on it. We have a low energy level, which typically means that the market is going into this little consolidation zone. The fact that we haven't been in overbought or oversold territory for an extended period of time, 15 days, we haven't been in overbought or oversold territory. That'll give you an idea when we look at that lazy day. That's why it's important. You can see that we don't pop this up all that frequently, and so typically you'll see overbought, oversold, overbought, oversold. It just has to go slightly overbought or oversold. So we're not talking extreme cases, we're just talking about a little bit overbought or oversold. And we haven't done that in a while with the Australian dollar. There's really nothing for the most part other than this pulse, which was a reversal from 3 weeks ago. This is the weekly pro alerts. So we're still working off of that particular low. Just go through a couple of things here. Here's the watch list. The watch list is positive, but barely positive. So there's a lot of upside strength to the market because it's still been relatively quiet. The other thing is that here's our depth gauge. These are daily bars that we're looking at here. But when we get this type of a condition, we're looking at the market with this big blue area having been in that trend to the downside, as I pointed out. Think of this as just a ton of water that is above us. And when we get these types of conditions, you can see that there's an ebb and a flow here, that we come down to a level and then we start to bounce back. It's not saying that we're going to go to new highs, but we just get this ebb and flow. Well, we've had this trend, and you can tell that it's a trend because this is kind of a choppy period, up, down, up, down, up, down. But when we have this trend to the downside and we're at kind of this lower level here, eventually the market kind of does a flip and reverse, and we're at that point where we've gotten to quite the extreme. Now, it's not picking up the basing, and it's not necessarily saying that it's going to head higher because this is slow moving. So the current condition is still bearish because this is more of a conservative type indicator as far as its trend. But the reality is that it's at an extreme case, and that's the key here. That is what the depth gauge is about. It's the blue. It's not just simply saying that the market has been moving lower, but we're talking about the fact that there's a lot of weight above the market. And when you get this type of condition like a contrarian, you can see that the market wants to or has gotten to an extreme case and is likely to go into some type of reversal. Now, it's been in that phase for a while, and it's not to say the market couldn't fall a little bit further, but here's what's taking place with our systems, and this will really give you a clear idea as to why it is that I'm bringing this particular market to your attention. First, we have just two systems. We've got a weekly system, which has been short for quite some time, since February. It's got a nice open position profit, and within this month, obviously about two odd weeks ago, we started going long the market with a daily bar system. You can see we've got a lot of systems here, a lot of intraday systems. A couple things I want to point out here is, one, we have intraday and end of day type systems, and so what we're looking at here with the weekly and the daily systems, we've been in these trades for quite some time, so we're not just short-term oriented. When we get a trend, we're going to stay within that trend, and then we're going to hedge and protect ourselves with some of the intradays. Now, those have not triggered as of yet, but because we're in that lazy day, the energy level is quite low. We're stuck between that support and resistance level, that energy zone. There's a number of things that are basically flashing with bright red lights saying you should be looking at this market. Now, which way is it going to trigger? Well, I'm not given any clue here because we don't really know, because we're just going to react to the market. But what will happen with all of these intraday systems, something is going to happen here with Australian dollar, and that you need to be prepared for it. And so that's why I want this particular market to be higher in your level, looking for opportunities and being able to react to the conditions right now. So we've got a locked in profit right now of over $6,000. But the reality is that that short and that long, it's not going to last, and that these intraday systems are going to trigger here. So in watching overall the different types of markets you could be looking at, I could easily be looking at some of the grain markets, which had some nice big moves as of late, and I could be touting all the performance that's been going on. I'm talking about Australian dollar because I want to prepare you for what could be happening with this particular market and putting yourself in a position to watch, react, and be able to take advantage of this particular market. Because with this type of a base, there's obviously a breakout above this level here and this support level right through here, and I'll put that into the deep dive synopsis. But just simply for our purposes right now, even if you don't have a lot of our indicators, at least be looking at the 50-day moving average. If we get a closing move above that, not just a break above, but I'm talking about a closing bar break above there, then there's ample time. You might leave some money on the table because you want to go long that particular market. But if you get a closing bar above there, then we would expect that the market would start to meander to the upside and that there'd be good opportunities. So the weekly systems that we've been in since February, well, not too shabby, and we can actually take advantage of those types of trends. Hopefully we'll get something that will set up where we'll have a nice trend to the upside as well. But for right now, the systems are hedged, they're protected, they're waiting, they're watching, and they will react to the market when the opportunity is there. I suspect, given those consolidation phases, energy level, energy zone, the lazy day, that opportunity is coming here soon. That's why I'm harping on this, and that's why I want you to watch this particular market. So watch it. Let's see what happens, and just simply watch the website for new and updated trades related to Australian dollar, along with all the markets. And let's see if we can't take an opportunity out of the market here. Thanks very much for watching. Bye bye.